Good morning, everybody. Welcome to the Flow Show, Friday, 4th of July, Independence Day. Check those skies for alien invasions. It could all kick off on a Friday. To any of the Yanks who are in this morning, why? It's your holiday. You shouldn't be here. You should be enjoying that. You don't need to be here on a Friday when markets are doing nothing. So don't know why you're here. But if you are, well, welcome. And then piss off afterwards. Apologies for my absence yesterday and Wednesday. I had some personal stuff to deal with, hence why I wasn't here late notice. But I'm back now for, again, don't know why. It's nothing going on. Kate, anything going on?
Yeah, I mean, glad you're back, Ryan, for one. What's going on? Yeah, I mean, just one thing for our viewers: if you live close to Americans, hide today, because on the 4th of July they like to shoot at stuff. So and they could shoot at anything. So just go hiding for a while.
Yeah, well, isn't that every day in America?
Good, yeah, well, but especially on the 4th of July, let's say. I had to place it, Ryan. Come on.
Yeah, I had to get some extra ammo in. You should go long defence stocks at this time of year, I suppose.
Yeah,
shooting that lot do. Anyway, enough of the jokes. We'll have more of those later. Let's get cracking. But before we do, just to let you know, we will be doing the first draw for the $25,000 trader funding program account for everyone who signed up for our newsletter during June. This is open. Obviously, we're not closing it off just yet. That will be closed off at some point, our early adopters list. But for July, we're offering two $25,000 TFP accounts. So get your name down. If you've already subscribed, that's fine. You'll automatically enter the draw. But if you haven't, drop your email and details in there. You can see the screen. I'll put the link in. Tick, copy and paste. There we go. So you got the link there. Just drop us your email and your name. Find out what's coming up. And you can also win a $25,000 TFP account. Now, the newsletter that will go out this weekend will also contain some juicy tidbits about what we're doing with the new platform, ForexAnalytix. So even if you're not interested in the prize, don't miss out some of the stuff that we're doing. We're going to drop you some little updates as we get them, and just to keep you in the loop of what's coming. Get you all nice and excited rather. Right. Anyway, on from that. Hong Kong Monetary Authority has apparently been intervening in the Hong Kong dollar for the third day. That's as it sits up at the top of its band. Let me get it up there so you can all see what we're talking about. We're right on the top. This is the band that they keep, 775, 785, sitting right up the top there. They have to keep intervening, though, to keep it within that band, which puts the pressure on that. I am interested in maybe hitting this for a short at some point, but not just yet, because given everything that's going on, we could be up here quite a while, and I don't know, be paying out money just to sit in a position. So this one might be a question of timing, if I can manage that. But they're intervening up the top there. Over in Japan, the big GPIF didn't have too good a first quarter of the year. They had a loss of 3.41% or 8.8 trillion yen between in the January-March quarter. For the fiscal year end, the last fiscal year, they had gained 0.71% or 1.7 trillion yen gain. They are still thinking about doing some active diversification of their portfolios. This was something that they've been talking about for a while now, but haven't actually pulled the trigger yet. But it's something they are looking at. Kay, I don't know if you saw those numbers. Does it make a big deal to be expected with everything that went on in that quarter?
Well, quite surprised that they lost so much in the first quarter, but that may be the Trump effect also. They are actually already giving some stuff out. BlackRock is one of those who is already managing a bit of money for GPIF, but if they increase it, the BlackRock people will be rubbing their hands again. It's not a big return, obviously, on the fiscal year. If you take into account the moves that have been, especially the investments that they had, I think some of those negative performances is probably all those bond moves that have been up and down, and as we were talking about during the course of the year, and even into Trump's inauguration, that the bond market has been extremely volatile, and I think portfolios like GPIFs are going to suffer under those volatility if they or their active managers need to all the time manage the portfolio. So that's likely the explanation. Giving more out, yeah. Yeah, I think they are just hoping that the active managers are doing a better job than the passive investors. But if you look at companies like Vanguard and etc., like the leaders of the passive investment, they haven't been doing too badly. So maybe
Yeah.
they better shift some money over to them instead of BlackRock also, or some of the other active managers.
Yeah, absolutely. And we get to see if they do any re-diversification back into domestic stuff as well over the next periods as rates go higher, if they go higher. Anyway, right, coming into a bit of data this morning, we'll start with, if I get my calendar right, in a bit of data out of Europe, nothing massive at all. German factory orders came in a bit shoddy, minus 1.4%. This is May data, so everyone's still waiting for when this spending is going to be kicking in, defence and infrastructure spending. It's going to be a long drawn out thing. Okay, you're not suddenly going to see factory orders rising 25%, but it should start trending higher or upwards at least if that's coming through. We had Eurozone PPI out as well, which came in as expected, 0.3 on the month, minus 0.6 minus 0.6 month on month, 0.3% year on year. We did have some other bits and bobs out. Retail sales from Italy, which are a bit worse than expected, down 0.4%. And we had some construction blathering going on, as you can see there, PMIs, which are all still looking a bit shit except for Italy. ECB's DeMarco of Malta, he's a stand-in for Scicluna, who's been done for dodgy stuff. He's standing in. Anyway, he says the ECB should hold its key interest rate at the next meeting. And the reason for the hold is to keep the powder a bit dry. He wants to build in some insurance. ECB's lunch says he sees price risks more to the downside. He's not uncomfortable with bets on one more cut. Victor Villeroy says euro appreciation has a clear disinflationary effect and the risk of inflation undershooting is increasing. This is the guy whose inflation in France is well below 2%, it's actually below 1%. That's why he's talking so dovishly. He says a strong euro may increase the risk of an inflation undershoot, and he's closely watching the exchange rate volatility. The ECB is currently in a good place on rates and inflation, though. So he has been sort of flip-flopping between we're okay on rates and we could cut more. Lagarde said that they will do whatever is necessary to reach the inflation target, and also repeated that we're in a good place on rates. We did have the ECB minutes out, nothing much new. Most measures underlying inflation suggested that in the medium term, inflation would settle around the 2% target. It was also contended that interest rates could already be in accommodative territory, i.e. they've cut enough to make it a bit of a boon for the economy, but we'll wait and see whether that's the case or not. Right, coming over to yesterday's data, and no wobbles at all for non-farm payrolls, coming in above expectations, 147,000. The unemployment rate was expected to go up a pip. It came down to 4.1%. That could be in part to the participation rate, which dropped to 62.3%. Government payrolls actually tacked on 73,000. So we're still waiting for whether we're going to get this blowout later on in the year of all those Doge cuts that came through. But meanwhile, they gained 73,000. Wages, that was all okay, came down a little bit to 3.7%, was expected to go up to 3.9%, so a bit of moderation potentially being seen there, although it hasn't strayed far from that 4% mark too often. So all well and good, Kay. No wobbles. How was the market going in? I wasn't watching it. Was it getting a bit nervous or?
No, actually, we went in around not far from where we are now. The question yesterday was if the NFP report was going to confirm the very negative ADP report, and it clearly did not. So yeah, we had another report that defied the laws of gravity for another month. So the market reacted as it should have by buying dollars, because that was since the expectations had been going down for the headline number. After that ADP, it was a little bit of the surprise trade, perhaps to see a better report. Actually, I know the participation rate came off, yeah, just 0.1, but it's pretty decent unemployment rate again. So that is probably going to keep the Fed on hold now in July. But yeah, it was a pretty good report. But the thing is, we are back to where we started, roughly, give and take five pips or so. So that still tells us, well, it tells us a couple of things, really, because yesterday I was talking, and especially in our room, I was talking about the expectations for the options market, and we know that the FX options market has a say in ranges that we can see during the day, and we actually went spot on to the edge of the overnight straddle price, and then bounced in the euro dollar, telling us that there's probably not been any involvement, or at least not much at all, of the medium term players. It was all short term stuff.
Yeah, and it seems like we need to get a big number either way.
Absolutely.
To get a reaction, and otherwise those option players have it tied up.
Yeah, it was though somewhere. We could have expected it, because especially with that drop in the unemployment rate, where people are thinking that it should like gradually nudge higher. But this is yeah, it was a decent report. Any other time where the market may be not looking so bearish towards the dollar and whatever goes on the big beautiful bill or so, any other day the dollar could have rallied a bit more on this.
Yeah, very much so. But here we are, holiday in the mirror, in the headlight, should we say, yesterday. So there's probably a quick rush out the door after those numbers dropped. We did get some other data as well, though. We got trade balance data for May, which came in a deficit of 71.5 billion, which was round about where we've been already. This is May data. Activity-wise, exports were down 4% from a prior up 3%. Imports were down 0.1% from a prior down 16.3%. So negative in activity-wise at both exports and imports were down. So that's no good. But again, this is May stuff, so it is, feeding out from all the front running and trade stuff that we've been going through. It's really going to be the second half of the year where we see how things are going to be affected with that sort of stuff. After that data, rate futures took a September cut down to an 80% probability. It was 98% before the jobs report. So all those expectations for a September cut taking a little bit of a dent. It does obviously look like July is well off the table, which is narrowing the window for the amount of meetings we got to get what the Fed dots certainly propose is 2 cuts to come. So we've got to get a move on, but a couple more NFPs like that and the data holding up, and market's going to have to reprice once again. After all that, we got the ISM, S&Ps, that sort of thing. S&P came in, the final number, this is 49.3, so worse than 49.6 previously, as a final number for this. Then we got the ISM coming in. Oh, sorry, there it is, not the global number. It's that one there, talking at me arse. 52.9, sorry, from the 53.1 flash. It was still down over last month, so I got that bit right. ISM as well, that came in looking okay. We went into expansion to 50.8 as expected from the 49.9. New orders jumped up massively, 51.3 from 46.4 previously, though unemployment went into contraction on that data. Prices also came in a little bit softer, but it's still running at very high numbers, 67s. Looking through the comments, a little bit of a mix in those. Some are seeing slower activity, a lot of them are seeing higher price rises as well as being a big feature of things day-to-day business. And I picked out this comment from an information supplier saying that the general uncertainty around the economy continues to drive increases in prices. Also, lots of software service vendors are using AI. They're using the AI boom to restructure pricing and products, resulting in massive increases. So you would have thought AI would maybe bring prices down, because it's easier to do stuff. Apparently not. Apparently everyone's jumping on the bandwagon and ramping up prices to get all their stuff onto AI. So maybe this is something we just need to keep in the back of our minds moving forward, whether this AI is going to be inflationary or deflationary or disinflationary. We've got the final durable goods numbers as well. No real change there. Came in at 16.4 as per previously. Factory orders came in a bit better than expected at 8.2. Take out the transportation, all the big ticket stuff, only rose 0.2%, but nothing of note there. And we also got jobless claims, which was doing nothing once more. Treasury Secretary Bessent has warned countries not to drag out trade talks. Speaking on Japan, says that Japan's in a tough spot now with the upper house election, and that election may be constraining talks. Trump will determine if nations are talking in good faith. So the deadline is next week. Can kicks are only likely if there's good faith talks. He also steamed into the Fed, though a little bit softer than Trump has, saying that the committee seems to be a little off on its judgment. Says there's lots of strong candidates for Fed chair, and hopefully they'll get to fill 2 Fed board slots next year. Says if the Fed doesn't cut here, maybe a September cut will be bigger. Deputy Treasury Secretary Falkender says the issue with Japan is non-tariff barriers. So it's looking like things might be running to the wire on those. EU's von der Leyen says they're aiming at an agreement in principle with the US. Trump has passed his spending and tax bill stuff. That's all gone off to be signed, sealed and delivered. He says that tariff letters are ready. They're going to start going out, and that duties will begin on the 1st of August. He also said talks with Putin have failed to yield any progress, so it's not going well with that. Speaking of tariffs, there's been a report out that tariff revenue was up over 25% in May to 24 billion. That's nearly 4 times what it was at the start of the year. So the US starting to rake in those tariffs into the old coffers, which will help with the old finances. OPEC Plus and all its mob apparently talking about a 411,000 barrel per day hike for August. We already heard that they're looking at another hike, but now we're getting some numbers on it. That'll probably change 50 times between now and that meeting. And this is a bit of a no shit Sherlock story, but a Reuters poll found 21 out of 25 economists are concerned about the quality of official UK economic data, with 10 saying they're very concerned. Don't know what the other 4 were doing. They must have been asleep, or they work for the ONS. Who knows? But as I say, no shit Sherlock there, but it's getting wider attention in the press how crap our data is. Right, anything else, Kay, or any comments on anything of yesterday? We're heading to this trade deadline now, so that's going to be front and centre, I suppose.
Sorry, mate?
We're heading towards this trade deadline, so it's going to be front and centre now.
Definitely. Ishiba found it useful to remind the US that Japan is the biggest investor and an extremely big job provider in the US. So, and I still think he's right. I think, well, I mean, that 20th of July election, we've already seen that it would be there should be a catastrophe if the LDP would lose those elections, but could be that things drag on a little bit. Akazawa is going to the US, by the way, over the weekend, as already mentioned prior days, but. So we may see a few headlines, positive or negative, coming out over the weekend after his visit. They will probably, on both sides, comment on that visit and on what is possible or not. So that EU thing, trying to make a structure at least for a deal, but then it's quite funny that EU in general is trying to talk it up yesterday, especially relatively positively. But then, if you look at the individual countries, they are not looking at it through the same lens. It seems so. I think we are not done, as I said on the prior shows as well. It would be an extremely big surprise if there would be any deals with the big blocks, at least on the 9th of July.
Yeah, I mean, we might get some MOs or anything like that, promises to get a deal done. But yes, is Japan talking tough or playing tough because of the election?
No.
Making sure that they show that they're not just going to bend over.
Well, there may be some of it for the local audience, but I think they rightfully defend themselves. And yeah, as I already said many times, I think they're right actually. I think the US should stop bullying them on that front. I mean, I'm always talking about the pure trade deals. Don't get me wrong. I'm not talking about like any real politics or so. But I'm talking about the trade deals. But I think they're absolutely right in defending their own, and they have the right reasons as well to do so.
Yeah, very much so. Right, so we've got NAFL coming up for the rest of the day, with the US being on holiday, so I expect things to get fairly quiet probably from now. Well, if they haven't already, but you never know. Sometimes when you get low liquidity moments, headlines, if any, drop, can cause bigger ripples in markets. So don't take your eyes off things. Make sure you're protected, but be very careful if you're thinking about trading today, because you don't want to get stuck in something that isn't moving, and then you've got to worry about what you're going to do over the weekend. So yeah, if the sun's out, get out in it, mate, people. And is that what you're doing, Kay? You're going to jog on a bit later?
Well, today I'm planning to do my big upgrade on my PC, which I couldn't do 2 weeks ago because then at that time Trump decided to drop a few bombs on Iran. So I decided to wait with my upgrade. That is what I'm going to do now. So if I go missing in action on Monday, maybe you can start a crowdfunding to buy me a new PC, mate.
I don't know. Probably your profit. You buy us all a PC, but Get yourself. What are you going to get? Get yourself a little Chromebook like me. Do all your web browsing nice and easy.
Yeah. No, I need to upgrade my BIOS and upgrade Windows as well. So
Good luck with that one, mate. I don't envy you at all with that. Right, where should we start on pricing? So I noticed that we had a little run up to 145 once more yesterday. Couldn't get through that though. Busted through by about 20 odd pips, 24 pips. And then we're back down again, right back in the middle. So I really don't know what's going on with this one at the moment. We seem to be the usual up and down, up and down, up and down, but we seem to be going sideways within the various ranges at the moment. So 142s on the downside, up to 146, 147, even 148s on the upside looks to be the main range we're looking at, and then do what you want in between for now. Have you got a feel for this one at the moment, Kay, or it doesn't look like it wants to go anywhere massively, does it?
yeah, none other than what I've been saying. For the time being, the yen crosses are still well supported. I think that's the uncertainty about trade deals and a bit higher yields, positive risk, probably a mix of stuff. But no, I think we're heading for we should be heading for a big move, Ryan. Once we will know, well, once we will have more certainty about what is going to happen on the trade deal. Either way, you know, if Trump and Bessent also or the other negotiators all of a sudden go ballistic on Japan and say like, well, sod you, I'm going to slap 35% on everything. I think the yen is going to get hit pretty severely. In turn, if we get a deal and a very surprising deal, which is now, and Besant gave us already another date. Well, it's not his choice, those Japanese elections, but if we would get a deal somewhere between the 9th and the 20th, all of a sudden, I think the yen could gain quite a bit. So yeah, right here and now, anything I do is more like a quick jobbing, quick scalping, and then get out again, because I don't know where we will end up after the trade negotiations.
Yeah, very much. And I was looking at those, just looking at those 10-year yields. We bounced from that 420 area pretty sharply, and then obviously the data as well. So really, a lot of this was the market getting dovish again over the Fed. And now they're having to do a bit of repricing on that as well, although obviously the short term yields not doing an awful lot in the grand scheme of things.
I think it's a combination of the jobs report and the bill passing. Huh?
Yeah.
Passing the bill is more debt and should be pushing yields up as well. I think the move we had before, the move down we had before is, as you say, a bit of worries on the jobs. Perhaps thinking that there would be deals which were less inflationary than maybe expected before. So it's been a bit of a seesaw move up and down, as we can see, anywhere from February, March, all the way to now. So it's been really up and down, up and down. And I guess we are going to continue with this until we see clarity on trade as well. The bond market isn't not relaxing. That is something that we can see now. If the tens can move like 15, 20 BPs on a day, that's not a relaxed market.
Yeah, absolutely. And yeah, it looked like it was calming down a bit, but we're off to the volatility again. Right, just going to look at a couple because I'm not fully up to speed yet, but keep an eye on a couple of positions I've been in. Dollar CAD being one of them. We've had another half look, shall we say, at these lows down here towards this 35.40 area. So I thought we might see a bit of protection buying ahead of those lows coming around the 50, 60, 70 area. Got down to the 50s. Whether we're going to try and get below and hold below this zone is now going to be important. We didn't stay below it for long in this move. Now we've had a bit more resistance getting up to that 136's area and the top of that zone. Now we're just trying a bit of a feeler in it. So this one is still looking a bit weaker. If we do, say, close the week below this zone, then we're probably heading lower, going through that level, and then we're going to be hitting this next zone down in the 134.60s to 135 area, which is a pretty decent traffic zone. I'll just show you that quickly. So this goes back to all this traffic area and beyond there as well. So it's going to be a bit of a zone to go to. So I'm still short a little bit on this one. I haven't added or done anything to it. I'll just do a bit of slicing. I'll see what happens when we get down to this area. Aussie dollar. That's another. It's doing another make it hard move, and this 65.70 level seems to be the next sticky point. We can't get and hold above there, so there's no point in thinking about 66 if we can't even do that. It's coming back down to the scene of the crime. So again, where this one finishes today, it's not something that I'm going to put my hat on where we close because it's a holiday day, but it wants to stay above this 30-35 area as a bit of a line in the sand. Perfectly, it will hold the 50 area, but if it doesn't, we had a little move yesterday here, and it got down to this 37, whatever you want to call it, 35, 37, all these prior high points, and that's where we held. So that's a bit of a key. If we're getting back under there, then we're probably going to have a look lower, and we're back in the box once again, and this will look like a little bit of a, not a fake out, but a struggle to stay out and hold the break. So I'm still a little bit long up here. I did lighten up in the moves that we got initially into the 80s. Dollar MEX is another one. That looked like it was on a bit of a flyer earlier. We got back up to this, almost a break point down here, around there, 83, 84s, 82s. Held that, so that's done what it needs to do, and now we're making fresh lows again. So we're on the move, creeping towards this 1850 level. I wouldn't mind seeing that tapped today, but I'm not sure if I'd add there or just take more profit and see what we want to do there. But that's going to be an interesting level for that one. Kay, I'm going to pass it over to you early, mate, because as I say, I'm not properly up to speed yet.
We don't have to look at too much today because not a lot has moved in the end. There was hope to show nice moving pictures, etc. And instead of that, we have a bit of a standstill picture. But just to take straight away to Ali's point, Euro sterling, yes, we went down to the 86.05-ish, a little bit below this line. This line is going to leave my picture very soon. I think for as long as we are, and I said it on the show yesterday as well, 95-ish, 90-ish Euro sterling. It still keeps this short-term thing going. The 50% is around 85, 90. There's still risk in the UK fiscal and whatever political situation, but the biggest stress for now, or the most present stress for now, is a bit behind us. We also see it in the gilt market that is coming back somewhere to the midpoint of the stress move that we had, which is about what we saw here as well on the euro sterling, but it's holding. So for as long as it holds around here, I'd say still looking as if we could push back up maybe to around 55, 56 or so in that euro sterling. I don't think that, well, and especially not today, although you never know with politics, but if nothing else goes on, if we don't have any fresh lines or so, I think it's going to perhaps stay relatively big, but potentially quiet down, and then we will see after the weekend what needs to be done with this. But it's still pretty big, I would say. Looking at your Kiwi, that looks relatively like the Aussie right now. We're in a wedge, like the Aussie as well. Tested the top side, couldn't break. Tested the downside, couldn't break, and now we are back somewhere in the middle. I see in your position, Ali. I don't know what to do with it around here. I think we're still looking relatively positive, actually. If we press through, where is it, the highs of the day or so, but even so, I mean, even if you go back up to let's say above 80, 85, then you have another level around 90 in the short term, and then you have this 61.0520 waiting upstairs. I really think we are not going to break too much ground, but just the one thing that we have to note, and we have to note it on nearly every currency pair against the dollar, is that we stopped the rot for now in the dollar, and we will see next week what's going on. But for now, we are more in a consolidation phase, thinking about what to do next with the dollar, and we can find it everywhere. You look at the Aussie, it's the same thing. You look at the euro dollar, it's exactly the same, and we're actually narrowing here as well. When you form a triangle, that means that the moves are starting to be less. By the way, yesterday, and I spoke about this briefly as well, 117.20, and especially in the room, I was saying like, okay, watch out for the overnight straddle because it costs about 70 pips, and we started from 117.90 and we stopped bang on where I was expecting the option hedgers to come in the market. And that's also why I was saying earlier in the show that I don't think that any of the big longer term or even medium, the bigger players have been involved in all of this, because otherwise we would have been either hanging around one of those edges, okay? But we are not, and we for sure haven't broken any of it. So for today, not expecting too much, but yeah, just keep those levels in mind. So around 118 and around 117, 2030, if ever we would get somewhere around there. Gold and silver still doing okay, but again, I think the deadline for gold is the one that Trump gave us on the 9th of July, or whoever replies to letters that have been sent out to all those countries, seeing how those trade deals will go. If we need the hedge, for the time being, it hangs around here. That despite higher yields, so that means that the market is not relaxed about any of those trade deals. Otherwise, we would be trading lower, right? But I think that the next deadline is coming, and the next move is coming. For now, I'm not planning to do much with this. Perhaps if it goes down around 32 3/4, try a little, just to have a little bit in the portfolio, for in case those deals go badly. Silver still the same thing, right? Bit of an up and down, but we're still hanging around that prior level here, 36.85. Need to break above 37 and a quarter, 37.30 to push up into the 38s, and our main support zone is still unchanged as well. And I'm going to leave it there. Ryan, back over to you, mate.
Thank you very much, mate. Good end to the week. Thanks again for taking over while I was off for the last few days. And yeah, thank you everybody for coming to the Flow Show. Hope you've had a good week. So don't go spoiling it on a low liquidity Friday. Go and take it easy. Enjoy the weekend nice and early. There are no other ForexAnalytix shows today. There's no face. There's no subscriber shows, Morning Edge Daily Roundup. But they'll be back and running on Monday. So have a great weekend, everybody. We'll see you next week.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.